In today's short video, we're going to go through some basic fundamental key practices for price action day trading. And I just organized 6 points here. They're easy and simple to learn, but definitely important and helpful to review, especially for beginner traders. What's up guys, this is Barro AKA investmentor. If you are considered too experienced to learn, please shut me down right now. Otherwise, please cheer up to be patient a little bit. Alright, let's start with what's price action day trading. It's clear a little by the name of it. It's to trade mainly based on price action or price movement in history. It's a form of technical analysis since it ignores the fundamental factors of the security and looks primarily at a security's price movement history. What differentiates it from the most technical analysis is that the main focus is the relation of current price to past prices as opposed to the value in price history. The price movement history can include things like swing highs and lows, trend lines, support and resistance levels, and so on. Price action trading is used mostly for day trading, and day trading is totally different from investment. Investment is more based on the factors in fundamental like financial reports, economy, business operation, and so on that impact the value of a company. As for investment, investors don't keep checking on price movements on charts and patterns in your trading system, right? But for trading, traders always watch price movements of charts and patterns in trading system closely like a nerd or a psychopath. Therefore, unless
you're really into the lifestyle of a nerd or psychopath,
you better think twice if you really like to be a day trader, okay? So, there are 6 key fundamentals here for price action day trading. The first is to find a market structure, and the second is to identify the value zone or value area. The third is to well plan for every trading setup for every trade. And the fourth is to avoid from trading in no man's land. The fifth is to understand the market behavior. And the sixth is to stay away from any trade in doubts. Okay, so let's start from the first one, finding out the market structure. For every market structure, it could be in short term, mid term, or long term. After identifying the length of term, we have to identify if it's an uptrend, downtrend, or range consolidation, right? So the first is to figure out the market structure and trends. Then the second is to find out the value zones or value areas. For every market structure, we have to find out the value zones, and in every value zone, we have to identify the supports, resistance, and ranges. There could be multiple supports and resistance and ranges, and they can keep changing along the price movements. Besides, we also have to look into some major moving averages like daily, weekly, monthly, quarterly, or yearly moving averages, and some of the meaningful trend lines for us to plan for better strategies to trade. The third one is trading setup. Before the start of everyday trading, before every trade, we have to do the trading setup to make a thoughtful plan beforehand to decide if this trade is a breakout trade, if it's a range trade, a swing trade, or a trend continuation trade, etc. And the fourth is to avoid trading in no man's land. What's trading in no man's land? Let's take a look at the chart here. This is a simple example for avoiding trading in no man's land. We just assume it's in a range consolidation here with the example in Tesla stock price during 2019 and 2020. In case the price movement has come into a range consolidation between $350 and $500. Within this range, we need to find out a more efficient entry point. It might not be efficient to enter in the middle of nowhere, right? If we enter at around $425, that would be too far from the upside resistance and also too far from the downside support. From a risk and return perspective, it might not be efficient at all. In this case, risk and return multiple is just 1-to-1, like we use $1 to trade for $1 or even less. Maybe $1 for 60 to 80 cents home. Maybe $1 for 60 to 80 cents home, so that wouldn't be efficient. This also put us into a stance where we may not even have that much to lose. It really depends on the products you trade to define the middle of nowhere for the entry point. It's based on the price range, volatility, and some other factors too. So, usually with more efficient entry and exit point, that would be somewhere closer to the upside resistance or closer to the downside support. As an example, if we set up an entry point at around $385 and plan it for a breakout or a range trade, our downside stop loss would be only around $35, which is 385 minus 350. But our profit potential could be from 385 to 500 or even higher, which is about $115 or even more. So the risk and return or R multiple could be 3-to-1 or even higher. That's obviously much more efficient this way, right? And that's how we decide entry and exit level generally. But of course, there will be a lot more sophisticated detail to look into, and we will surely cover more of that in the future video. Number 5 is to understand market behavior. It's very, very, very important to know that in the long run, stock market should always be in upward trend eventually. Unless the earth exploded along with human extinction, it's proven by statistics and a lot of academic research that stock market should be always in upward trend eventually in the long run. That's why we don't have to be panicked at all for any stock market crash, which could be like an annual sales event for us to take advantages by buying the dips. During the long-term upward trend, no matter for 1 year, 5 years, or 10 years, there will be still a lot of pullbacks along the way, as well as range consolidations, price swings, and fluctuations. So we have to understand the market behavior is something like shape of the market. We have to constantly identify if it's an M-shaped pullback, it's a V-shaped rebound, if it's a W-shaped rebound, or if it's a shape of head and shoulder, wedges up or down, etc. That helps us work better on what everyone will do, so-called buy low and sell high. Other than shape of the market, it helps a lot to do more of our own researches for some relevant factors and momentum. For example, US dollar index is very important to US stock market as well as the related markets. In case US dollar index break down below 90 and go all the way down, that will affect a lot to the US stock market, especially those blue chip stocks which are highly affected by US dollar index. Moreover, for each single stocks, we can always look into the price movements of the relevant stocks or companies. For example, everyone is crazy for meme stocks nowadays like AMC, GME, and all that. They're highly correlated, interconnected nowadays. It's the same for cryptocurrency. Bitcoin, Dogecoin, and all the other crypto are highly correlated and impact each other too. Number 6, the last but not the least, is to always stay away from any trades in doubt. In financial market, there are just too many different stocks and too many different products to trade, and we may also trade stock index, stock derivatives, index futures, etc. Whenever we are in doubt of any stocks, strategies, or market conditions, we better stop the trade immediately. It's better to stay away from any trade in doubts. If we're not familiar or in doubt of any trade or any market condition, we just get away with it. Otherwise, it's very likely we just trap ourselves into a gambling world. Never force ourselves to trade like a gambling until we become familiar and confident with our products, conditions, and strategies. So we make solid decisions to well plan for every trade. Okay, that's about the 6 key fundamental practices for price action day trading. They are very easy and simple, right? But extremely important to keep in mind. Let's have a quick recap here. The first is to find out the market structure, and the second is to identify the value zones. The third is to well-plan trading setup before every trade. And the fourth is to avoid trading in no man's land. Number 5 is to understand the market behavior. Number 6 is to avoid any trades in doubts. Alright, I hope this could be really helpful for your trading. Please never forget to smash the like and subscribe button with any of your thoughts and comments down below this video. We will donate to the charity recommended by you based on the number of likes and supports, and disclose everything in detail every month. We will also give away free cash gifts in the future live stream and short video to those top subscribers who leave most likes and comments in total. It's always great to share and give away, especially during such a time of disaster this year. Alright, I'm looking forward to having more with you. Until next time, see you.